Welcome to Count Me In. I'm your host, Adam Larson, and today we're joined by Samantha Jewell, author, CEO, soil carbon advisor at Earth.io. Samantha's path in the carbon markets began with concerns over food ingredients and GMOs in the 1990s, leading to her groundbreaking work in organic farming and soil carbon credits. In this episode, we'll explore Samantha's pioneering efforts in Australia, where she was the first to buy soil carbon credits in 2006. We'll discuss the immense potential of regenerative agriculture and the role of financial markets in driving ESG adoption. Samantha will also share insights from her book, Carbon is Not a Dirty Word, and how emerging frameworks in blockchain technology are shaping the global carbon market. Get ready to be inspired, and let's dive in. Well, Samantha, I'm very happy to have you on the podcast. Thank you so much for coming on. And today we're going to be talking about carbon credits. And I wanted to start a little bit about, you could share about your journey into the carbon markets and what kind of led you focus on, especially the soil carbon credits.
Yeah. Look, I started 27 years ago back in when mad cow hit England, and my family was feeding 50,000 customers a week with the family restaurant. We're the first restaurant chain in Australia in 65. And I was pregnant with my first child, and I went, what? They're feeding a cow meat? That's just the most insane thing I could imagine. And I kind of thought, well, God, what are we? We're Australians. We're so laid back. And so we probably aren't paying any attention to this. So I went into the family business and went through every ingredient on the stores, because we had a very big menu. We made everything from scratch, but obviously you bring ingredients in. And I wrote to all the companies, and at the same time, I discovered GMOs, and I found a lot of the companies didn't even know what they were putting in. Like, say they said they'd put sugar in, or sugar was extracted with a genetically modified enzyme. So I was kind of instrumental in, because of all that, actually influencing a lot of the really major companies in removing those things because I'm sure I wasn't the only person, but it became like, oh, there's companies doing this, and there's a family restaurant. And so, I kind of got started down that. And the reason I then went to organic was there was nobody doing paddock to plate methodology or looking at it. And obviously not only could we not afford to put it into every food line, but over the course of time, I put quite a lot of stuff in, and I obviously became more and more involved with the farming methodologies and what was going on. About 2005, I was paid by my family to go all over the world to all the conferences. So I got like a little mini PhD by the way I was doing it, but it was sort of self-educated. But I found at one of the conferences, there was the Australian of the Year, and he was saying, you organic farmers, you're the single greatest solution to the climate. And they're all like, what? And they said, because you sequester the most amount of carbon, you put the carbon back out of the atmosphere and into the ground. And so it was kind of that like epiphanic moment. I was so fed up with the infighting and the different paradigms about how you do something. And I thought, this is it. This is the solution, because it's an element. It's in everything. So how you get there, I'll leave it to the farmer. I'm not the farmer. I don't know how to do it.
Mm-hmm.
Probably do know how to do it now, but let's just say I don't know how to do it. And I went down this rabbit hole, which I have literally never come out of. And I became the first person to buy soil carbon credit that got the Australian government recognising it as a financial tool in 2006. And I went on to then watch them for 14 years, debating how do we measure this. And it's pretty obvious: take shovel out, stick it in the ground, and if it's going black, that's carbon. That's about it, really. I mean, obviously there's other factors to it, but it becomes very obvious. So I really have been on that bandwagon for a long time. And so I do know that there is a big difference between a good credit and a bad credit, and how to get that. And I really kind of became obsessed with being that focal point, being that bridge between the city and the finance markets and the country and the farmers who don't know anything about the finance markets, or not. They do, they know it about agriculture, but not necessarily about this whole climate issue, because then you'd have just as many people in the farming side as you would in the city side who say that climate doesn't even exist. which it does. I mean, really, it does. Let's just
Mhm.
put that one to bed and move on. But I will say that agriculture has the single greatest capacity, is the one thing we really do economically rely on and manage and have influence over, that we can make the greatest impact on the climate, because if everything went regenerative, actually truly regenerating the soils, we could soak up twice what we emit. And I think a
Mhm.
lot of people don't realize that, because the agronomists measure only sort of, where's your thing, about that deep, 6 inches. They're really only measuring where the roots are of the plant. And that's their whole focus. It's about chemicals, what we do to make the plant pump out of the ground. But actually, we measure a metre into the ground, and we work with farmers that have been developing carbon for many, many years. The plants, when allowed to do their thing with biodiversity, with root density, they actually take the carbon many metres into the ground. And that's kind of really where the agronomists and scientists have got it wrong, because they only measure a very short distance. They don't realise the capacity of the earth to take it into the ground. So there is different ways of doing that, obviously, and does require change of mindset and therefore funding, which is where I come in, is trying to get that money across the line between the two. And we're very close to being able to do that. That was a long-winded story, wasn't it?
That's quite all right. I mean, it was nice to kind of hear the trajectory of your passion and, kind of how you got there. And I think we could kind of just take a quick step back. Maybe you can define what a soil carbon credit is as opposed to other types of carbon credits, because people listening might not quite understand what we're talking about here.
Absolutely. And that's probably one of the biggest hurdles for a lot of people, because most people think, you say carbon, they say trees.
Mhm.
And obviously trees are the simple thing to do, because you can look at them with a satellite. You don't have to go out. We go out and do soil cores, and then they take them to a laboratory. And it's kind of the Rolls Royce of carbon, because of the laboratory testing of it and the depth and quality of it. So
Mhm.
you're looking at stable carbon that will be there for, a lot longer than a tree grows. And you've got to say, and you say, oh, we've got this whole 25-year thing on it. It's like, well, look, if you got the carbon into the ground at depth, you spend a bit of time getting it there anyway. And you don't want to get rid of it, because the carbon actually provides a whole raft of reasons why, once it's in the soil, it actually improves everything. So it's not something a farmer wants to get rid of. In fact, people buy land based on how good the carbon is without realizing it, because they just call it good soil. And
Mhm.
and it is geological factors, that's the minerals and rocks that are in it. So the difference between, let's say, an energy credit, a lot of that is what I call mitigation. It's like, I won't put carbon into the atmosphere. So that would be biochar, that would be, reducing things, turning lights off, you're reducing your bill, you're putting in renewables, which are not emitting carbon to create energy. These are all things that probably people are more familiar with. But
Mhm.
when you're talking actually reversing the climate, you're talking about taking carbon out of the atmosphere. Well, people only probably know about carbon capture, which is a little bit of a furphy, because of the enormous amount of energy that it takes to create it. And plants do it in a simple day's breath.
Mhm.
So it seems a bit ridiculous to spend all that money on a machine, when if you put that same money into farmers, you would achieve it within a few seasons. Because obviously it only really is happening in the growing season, when the plant is growing and taking the carbon into it to photosynthesize. That's the simplicity of it.
Mhm.
So is that a clear enough differentiation?
Yeah, no, I think that's pretty clear. I like that differentiation. And it's beautiful how the earth is created, how growing seasons are different on different parts of the world, and so when one season is done, then the other part of the season is grabbing the carbon from their side. So it's a really kind of a beautiful thing the way you described it. So as we're a podcast, for accounting and finance professionals, and you've talked to many different CSOs, you've had to educate CFOs, different businesses, what are some of the big challenges that you've encountered as you try to educate these teams saying, hey, this is important, you need to pay attention?
Well, because it's a lot of money and people don't really want to do it in the first place.
Yeah.
Every region is different, because a lot of the main people buying carbon are really big multinationals. So they're dealing with every region.
Mhm.
And the regions themselves have different rules. So some might say, we only do carbon that is sequestered in our nation, or we only do carbon that is under our rules, and that's very hard because you might be growing it under a particular methodology or paradigm, and there is no international standard. So getting a CFO up to being willing to spend money on it is problematic because they know nothing about the science. And so they've got to bring a science person on who can understand what you're saying and translate it into their local standard. And most of them just say, that's all too hard. I just want the box ticked and I don't have to think about it. And that's a problem in itself because some of the companies that I won't name that are predominantly used in America have been, corrupt. They've been, selling trees that weren't there effectively. And using different maps. And so we're using a much more rigorous system. And so actually it's much more like, yes, we've truly sequestered the carbon. And I think the other things to be aware of is that whilst the CFO may not understand how to get there or how to do the science, they have to sort of, I suppose it's about developing relationships like with everything. And why do these podcasts? It's about, you need to know who I am and how can you trust me? So I've been doing this a long time. I'm a true OG in the carbon space. And I work now with a wonderful guy out of the UAE, and I'm looking at relocating over there at the moment, who's been doing this for a long, long time. So it talked to big business and translating my passion speak into financial speak for them. And that primarily the big thing we're seeing is that scientific education and getting that across the line into a way in which they can understand it that meets their metrics. So basically, the CFO has their own boxes to tick, mainly around ESG, and we're the E in the ESG, but the S and the G are also, obviously governance is the big part that we do already in it. And I suppose the big S part of it, the social part of this whole thing, is that if you don't get the simple concept that farms are being turned into big agribusiness and humans are leaving the land at a massive rate. So we've got, in my lifetime, it's gone from 2/3 globally lived on the land and worked the land, and 1/3 were in the cities. It's now 50-50, and they're saying within a few years, it'll be 2/3 in the cities and 1/3 on the land. Now, the problem with that is that means machines are doing everything. Agribusiness is doing it. You've got to be huge to stay in the market. Food is incredibly cheap. And what is going out in all that is nutrition, nutrients, food security, and carbon and water. So because we're destroying soils, because agribusiness almost can't do it right, I just haven't seen them do it well. And because they don't walk the land, because land isn't homogenous, it's different everywhere. And a farmer with a smaller amount of land actually is physically walking the land and getting out of his tractor and looking at the land and working with it, where a big agribusiness is working pretty much on robotics. Everything is chemically sprayed, and it's more problematic because it's harder for them to embrace the concept that weeds need to be there. There's a reason for them. There's a whole lot of other factors that come involved. And I think as we see diseases increasing, not just from bad diet, but some people eat very well and they source all their ingredients well, but the nutrients, even in the organic agriculture, are not in the soil anymore. They're just not there because of this destruction of this atmospheric everything exchange. So hopefully that I said that simply.
No, I think that's you're definitely a great educator in explaining why we need to care about it. And I guess the next question I would have, for a CFO of, let's say they're a CFO in some industry that they don't think it's connected to agribusiness at all. And they're like, well, okay, so why would a soil credit be a part of my company's ESG strategy, but we don't even touch those aspects of the land? Maybe we can help break down those barriers a little bit.
Yeah, so obviously it's more easy for somebody who has a supply chain connection. And in Europe, for instance, they've just passed a new, I think it's a tax law. I'm not sure which law it is, but they've just passed a law where a business that has a direct supply chain can claim investing money into that supply chain to get it to carbon neutral. So they can actually have that as a tax write-off. I
Yeah.
don't think that's in America. That's only in a few places. And a lot of the arguments about it are, well, is the business getting to net zero themselves? So say you're a steel factory and you're wherever you are, you will do whatever you can to reduce your energy and the simple points. But they might get to a certain point where you literally, there is no other technology. There's no other way you can reduce your carbon. So you have to buy some carbon offsets to offset that gap between what you've got left over. And the point is that by buying a soil carbon credit, you are buying a direct impact onto the land that is, no matter which way you look at it, supporting you. It's supporting you atmospherically. I mean, it is all related. So it doesn't matter which industry you're in, the earth is something you're on and you're a part of, no matter where you are. We are actually all interconnected. So it doesn't matter which industry you're in, if there isn't a direct correlation to your supply chain, you can buy a soil carbon credit and it is related to what you're doing because it can't not be. I mean, you breathe and you eat. Both of them are involved. You have staff, you have, there's just no way you're not involved in that.
Yeah, I see. I really see what you're saying. So the ROI is a healthy people and a healthy earth. Is that the ROI? Because from a business perspective,
look, you can, if you want to go just from that sort of social aspect, yes,
Yeah.
you can as well. You are going to be, if let's say you're a business and you trade, I mean, it's probably more difficult for a business that's only working within its local area. But at this point, it's really only major businesses that are affected by the global laws that are occurring. So my understanding is Trump has pretty much said, forget it, climate change doesn't exist and I'm going to get that gold oil. I mean, I've heard him on his talks and that's fine. But a lot of businesses in America and otherwhere trade internationally. And so the most important thing is, well, if I'm in one country which says, is that net zero? And you're in another country which says, I don't believe it, you will have a tax on what you are importing. They will either not take it, the product, because it hasn't got those carbon credits already embedded in it, or you will be, or you'll be taxed against it, or you might just not even be able to trade with people because they've made some policy around that. So it's pretty important for a business to weigh all those things up and to see if they don't do it where that cost is going to come in for them down the line. And if they buy carbon credits, which the other big thing to be aware of is there's not that many of them around. Right now we have, whilst it's difficult to get it across the line in terms of CFOs understanding it, we have billions of tons being requested, of which there just isn't that many. I mean, it takes years to develop carbon in the ground and do all the measurement and all the auditing and all the, to stop. So there's no greenwashing. But there is not that many carbon credits. So if you're a business that is seeing the light, you want to get ahead of it. You can trade carbon credits. You can put them in the carbon market and, cover your cost on them. You can, you can buy a surplus, trade some and offset what you need for yourself. You can store them for the next year or, because the price might be going up. They're just like every other market. They have their own market volatility. So obviously the difficult thing with that is that at this point is there isn't an international framework. So you'll have, I know there's a lot of carbon credits coming out of, say, Africa, where you say, well, how authentic is the on the ground? Like whenever there's, difficulty in the governance of something, the value becomes different because you're saying, well, you've got to have some other methodology that's valuing it and putting insurance in it. And so there are a lot of other factors that are coming in to try and get around the fact that there is no global framework for it. And I mean, I'm trying to sell a very different carbon credit to, let's say, the Australian Carbon Credit Unit, which is a 25-year credit. I'm selling a 1-year commodity credit, which the CFO can write off on their books and put as an asset, as opposed to a 25-year forward promise, which is a derivative. So, and I believe the SEC just recently called the carbon credits derivatives because they're a forward promise. But I am selling a 1-year credit, which doesn't have that problem. And the way I try and explain it to people is to look at it as a fractionalized credit. So because it's not, a 25-year credit is, say, I don't know, in Europe they're selling for around between 60 and 80 euros a tonne. And an Australian carbon credit's sitting today at around 35 Australian dollars a credit. So they're all different based on different rules. And we're selling one that's probably around $10 a credit, but it's a 1-year credit and it's got a lot more rigor around it. And because it's measured every year, there's a lot more expense in it. It's not every 3 years or 5 years. And the farmer actually enters it, and they have to offset their own footprint as well before they sell them. And there's this whole discussion about methane, which is I'm not going to go into, but is actually not accurate the way it's measured. Some people have got a cow inside, like Holland, and others have got them out on the ground walking, and there's very different amelioration of the carbon in the methane in that. Anyway, that's another subject.
That seems like a lot to keep track of. And you approach, you connect with, carbon credits across all the different regions. How do you manage the, okay, this in Europe, this in US, this over here in Asia, this in Africa? Like, how do you manage all the different rules? Because there's no global standard, as you've said already.
Yeah, look, the big thing really is to talk to each market. And then, a ton of carbon is a ton of carbon. It's kind of ridiculous. We'll have, say, the European market saying, well, how did they grow it? What grasses were they growing? And it's like, it's kind of irrelevant. They could be an agribusiness doing it with high chemical. I believe they wouldn't be able to achieve it, but let's say they did. That isn't the point. The point is, if they've got a ton of carbon they've taken out of the atmosphere and it's in the ground, how they got it there is not actually relevant. But at this point, it's all about the story, because there isn't everywhere laws. They want the PR thing. So you might have to represent the information. Whereas there are some, like Stella McCartney, the company in England, the McCartney daughter, has a whole fashion label. She sources her wool and sends her executives out to one of my farms in West Australia to actually talk to the farmer and learn what they're doing on the land. And there's such a desire to not have the greenwashing. People are really taking it on themselves to do the research. So you can do that, absolutely. In fact, we encourage it. All of our farmers will welcome any exec that wants to come out and look at what they're doing. So, and I suppose even with farmers throughout America that I know, they are upset about the greenwashing to the degree that they don't even want to enter the carbon market. So there is a lot of education still to go both sides to get that across the line, because there's always charlatans everywhere. There's always snake oil salesmen. So you've kind of got to work with that. I worked through the Bitcoin thing thinking blockchain was the best thing in the world. So I'm very aware of these different parameters that have to be traversed in these different regions. And we just work with client one-on-one and basically design what they need. So some of them are more difficult because you've got to go back to the farmer and say, look, you've got to give us all these records. When did you plant? When did it get to this stage? When did it get to that stage? Have you got any visuals on it? And some of them might be able to meet those metrics. And so we're kind of learning as we go what each market wants, and then going, Lord, we've got to do this from the beginning. We've got to actually gather all this data as we go. So it's still a bit of a learning curve for us as well.
So when somebody purchases a carbon credit, where does that money go? Does it go back to the farmer eventually? Like how does that help?
Yes. So, there's, because of all the legal things and international stuff, there is, like you're trying to get as little of a chunk, like the majority of it to the farmer. But it's been hard because every time we go through another intermediary, they want a clip. And so it's very hard to keep that. And some of the protocols are on, we want direct. And I got into the blockchain space in 2017, 18 to be able to do an exchange that was directly from the buyer to the farmer with a very small clip. And I just got more and more and more and more regulation on my part that was beyond my capacity financially to meet. And then I was like, oh, I've got to go through an exchange. So then it was, I'm just saying each one has added something, and I've taken nothing in 27 years. So I'm like, I'm passionate about the farmer getting the majority, but I am very, very aware that there is a percentage cut in all of that because of how expensive it is to do, to measure, to audit, to fit with all the regulations, et cetera, et cetera. But our goal with the one we're working on is 80% to the farmer. So, and obviously that's where blockchain and smart contracts and auditing can really come in, because you can put everything into the blockchain at every stage to get that transparency.
Yeah, and utilizing the technology to help reduce your overhead to make sure that the most of the cost. I mean, that makes a lot of sense to set it up that way. So you wrote a book, Carbon is Not a Dirty Word.
Yes, I've got it here. There it is.
Yeah,
Carbon is not a dirty word.
Carbon is not a dirty word.
And I'm very proud of it, because I actually hate writing books. But I wrote the book because my business partner said, like, he was running into all this trying to sell the carbon. There's such a problem. The financial people just don't understand it. You need to write a book because you know so much. So I did that. I wrote the book, and I was trying to keep it really simple. It's a 4-hour read. You can buy it on my website, samjewell.com, or my business one, earth.urth.io, which I think is on my screen. And it's the greatest thing I have to say is that I gave it to a farmer who said, read a book in 30 years, I'll never read a book. And then he rang me twice to say, one, that he'd actually got halfway through and he'd only spent 2 hours. And then the second time when he rang me, he just said, I wanted to ring you to say I didn't think I could learn anything more about the land. And you've changed totally changed the way I look at agriculture. And that's from a farmer who'd been in it his whole life in the sugarcane industry. So I was kind of like, that just moved me completely, because that's like my ultimate goal, is to be able to get someone who really doesn't understand to get the simplicity of why the soil is the solution to everything, no matter whether you're an accountant or a CFO sitting in a business in New York, or you're a farmer out in the middle of the boondocks, why that is so important.
I think it's great. I encourage everybody to check out the links in the show notes to check out Sam's books and her website and her organization to keep the conversation going, because we need to keep educating ourselves. Obviously, this is a very emerging market, and I love that you're at the forefront and we're having this conversation now. I think it'll be interesting if we had this conversation again a year from now. What do you think that conversation would be? What would we be looking at then?
The big thing I think that will happen is that there will be more. Look, I think eventually COP might get there, where they get to a point where they come with a framework. They did have some movement on the voluntary market frameworks. As I understand it, I've been kind of watching. I'm not there this year, but I've been just watching the sort of LinkedIn posts from people in the voluntary market saying, oh, they made a bit more progress on it. So I do think eventually that will happen. The big problem is that obviously a lot of nations have got less progress than others. And so they don't want to be hindered by that, because countries that moved ahead actually had their GDP affected because that money has to go somewhere. So it goes into the whole cost of things. And if you're trading with other nations and they go, well, I can go and get it cheaper over here, you miss out. And so that's really been a big problem. I mean, people have had to pull back and others are moving forward, and we're kind of helping work with nations, advising them how to put frameworks in that will bring them up to scratch with international standards. And I think that as they get there, the ESG laws will be the big thing that will change. That's already started. The UAE had their ESG laws come in 1st of July, and they're scrambling even to know what their footprint is. I think there's an estimated $30 billion globally being spent on footprint analysis alone. So it's a huge market, even in the analysis space, which obviously the CFO is intrinsically involved with, because they have to do it. I must say that when I spent a year ringing the CFOs through LinkedIn, and not only did they not know them, when I read their, what's that document? Anyway, they have to put a sustainability document out. It was all social. There was no understanding of the E part. There was maybe a mining industry might talk about what they'd done with new equipment or industry stuff, but they never talked about offsets because there's this whole viewpoint that it's just letting the polluters pollute rather than understanding they've got to reduce first. So I think that will get there. I just think it's a matter of time.
Mm-hmm.
It's trade that will move it. It's the money markets. The other big thing that's really affecting it is if you're a business seeking money, if you don't have your ESG stuff together and your carbon net together, you just won't get money. And really, that's what will move everything because everyone's looking for money. And if you don't have a credit score or like a carbon score or rating, whatever they call it, that will make a big difference to business in business expansion. So I just think as that trickles in, that'll become de rigueur. It'll be normal.
Well, I think that's a great place to end it. Samantha, thank you so much for coming on the podcast. I've learned a lot. I hope our audience has learned, and I encourage them to keep the conversation going and keep learning about this emerging market. Thank you so much.
And please feel free to reach out and we can help you with your ESG strategy and planning as well.
This has been Count Me In, IMA's podcast, providing you with the latest perspectives of thought leaders from the accounting and finance profession. If you like what you heard and you'd like to be counted in for more relevant accounting and finance education, visit IMA's website at www.imanet.org.